All right, I guess we can get started. Uh, First thing, I dropped my mouse, so I got to pick it up. You have no idea how much trouble these little productions cost me. But anyway, I had started earlier today and lost all my information, so I had to do it all over again. I want to say something about charts, though. The charts that you see me display in front of you, uh, I display them for what I'm trying to share with you, not the time frame. They may come from any time frame. Okay? And number two, I don't know anything about these companies. I've never invested in any of them. I'm only using them for display purposes only to share whatever I'm talking about with you. Okay? Um, there is one thing though. I do know that if you have a TD Ameritrade account, they have a program called Think or Swim. Think or Swim. And you'll see that on the word spreadsheet that I send you. And you probably can do a lot of this in Think or Swim. And if you have that account, the program is free. I do not know how to use the program. I will not be able to help you on that, but I'm sure that they have a support group that can help you if you have a problem. Okay? Uh, there were some other things I wanted to discuss, and I left them. While I had a problem, these other things that I wanted to discuss, I went on and typed them on here for you. There are a few things that I thought were critical. Um, One is the psychology of drawdowns. A drawdown is when you invest in a company and it goes against you, which means you bought it at 20 for it to go up to 25 and it went down to 15. That's what's called a drawdown. Drawdowns are common because we never know when the absolute bottom is and we never know where the absolute top is. But what gives us confidence in drawdowns is that we know we have a very good company, okay, good earnings, good everything, mostly everything, and we also know we bought it at a strong relative low. I say relative low because there are companies that we invest in that are not at the 52-week low, which is ideal or lower. There are companies we invest in that will not be at the 52-week low or lower, okay? Um, at the end of each section, and I'll show you here, I have put in a section called Insights right here. I put these insights in as I think of things ahead of time, and it'll give you some information. Some of it's psychological, some of it's technical, and I don't think too much of it's fundamental right now. But it's to help you grow, okay? I have this one in red, and I want to read it to you. Remember, we do analytical due diligence to give us insight into the movement of the price of the stock. We are calculating risk takers, and the chart gives us a visual of the probability of price moving in one direction or the other. Okay, the price of any stock we're interested in. Try your best to see what the chart and tools are revealing to you, not what you want to see because you like the company, okay? Try to understand what the tools and the chart are revealing to you, not that you like a company. Never fall in love with a stock. Falling in love with a stock is like falling in love with a cheating friend or a cheating spouse, okay? Never fall in love with a stock. You're only there to make money. They don't care anything about you. The more charts that you look at and review and draw these things that I'm sharing with you, the easier it will get for you, okay? Always know where your support and resistance is, and support and resistance mean more when the chart is a long-term chart, like a weekly or monthly chart. All right, I just wanted to point those things out again. Now, invariably, you're going to see all this stuff as you start your journey. I call it a journey because it's a process. It takes time. But you're going to see it, and there are a lot of things you're going to overlook. I know it because I've been doing it for 23 years, and I still overlook things. So don't get angry at yourself. Write down the things that you want, your investment plan. Write down the things that you want. We'll go through one later on, that you want to cover in your due diligence so you don't forget to look at anything. Okay? All right, this is the second analytical video. Had to give me a little coffee there. This is the second analytical video, and I have here a chart of AAL. What company is that? I think that's American Airlines. I don't invest in that. But anyway, I have a chart up, and I've already identified, so you know what they look like. I'm going to scroll this out so you can see it better. Some candlestick reversal patterns, okay? I circled them. As you can see, the stock was on an uptrend, and then it broke the trend and came down here. And now it looks like this is support where you see these circles, okay? They're also candlestick patterns, okay? The second chart is ABCL. This is a weekly, but I'm gonna put it in daily, okay? I bought this chart up to show you what it looks like when moving averages are crossing over to the downside, all right? Generally, that's not a good thing, okay? And I also want you to notice that there was a capitulation here. Look at price. Look how all these people bought this stock and it went up and got tricky. Came back down, okay? Our third chart is ABR. I got this one to show you, and like I said, I don't invest in any of these companies. I don't know what they got going on. But if you can look closely here, you'll see the moving averages snaking. We call it snaking when they're intertwined like that. You never know which way they're going to break. Are they going to break to the upside or downside? But what you'll notice is that after the snake, this one fanned out to the upside. Generally, it's kind of a rule of thumb that if the stock was on an uptrend before it started going into a confused session, that's where it was snaking, that at some point it will resume the uptrend. But that's not a guarantee, but that is somewhat the school of thought. The next one is AOI, price action, two-legged pullback. Okay, here, okay, I'm going to blow this up so you can see it. This is what we call a two-legged pullback. If you notice, price came down to this point. We drew a trend line there just to show it. And then we take the highest point when it somewhat snakes right in here. You see, this is the highest point, and we put it there. So what we say is that price may go down to this point. It's just a measuring tool to have an idea of how low price may go. Now, you got to understand, all the tools that we use, none of them are the gospel. They're not exact. They are probability tools, and that's why we use them, so we have an idea. All right? This is what we call a two-legged movement, because these things tend to make two legs. We can see the same thing right here, where you see a Fibonacci pullback right here. This is a shooting star, okay? I'm going to take my tool, and I'm going to draw from here to here, right here. Okay, that's one leg. And then I'm going to move this line to the highest point up in here somewhere, which would be right here. That's the second leg. And as you can see, it didn't go down to the bottom. That's a good thing. But at least it gives you an idea. This up here, what you see here, is an evening star. That's why it's important to see. It's important to understand, for me it is, candlestick formations, because here you have what we call convergence. You have moving averages crossing over to the downside, and then you've got an evening star, which is basically saying price is going to reverse. And notice that they're all up under the 200 period moving average. So the question is, where do you think this company is going? Okay, that's what we mean when we talk about convergence. Okay, and that is many things pointing in the same direction. All right, now we're going to go to 1, 2, 3, 4, 5. Oh, these are candlestick reversal patterns at support right here. That's what I'm trying to show you here is candlestick reversal patterns at support. There's a morning star here, and this one right here is a morning star. Two morning stars right next to each other. So you'll have to get good at reading candlestick reversal patterns. I strongly suggest that you read the book, Candlestick Patterns, and I think I sent you a PDF on it. And the ones that are the most important are the major and minor reversal patterns for support and resistance. Those are the ones. Now, I did things a little different. I actually read the whole book, highlighted the whole book, and I made index cards. So I'm pretty good at candlesticks. At the time I did that, which was years ago, I thought candlesticks were the answer to my dilemma. However, I found out that they were only a part of the answer to my dilemma. And I think you'll find the same thing. That's the reason for these videos, is to expose you to the different tools that are available to you to help you win at this game. Okay, here's what we got here. ABCB. Moving averages fanning up and crossing up, price moving up. Right here. That's what I pulled this chart out for. You see the moving averages crossing up? That's your 8-period moving average crossing up over the 21 period. And eventually the 21 period over here, which I didn't highlight, but I want to for you. You see the 21 period crossing up above, you see it crossing up above the 50. Now, generally, when moving averages start crossing up after they come out of a downtrend, the 8 crosses over the 21, then the 8 crosses over the 50 or the rest of them. Okay, but generally the 8 is the short term, so it is the first one that starts giving you a signal. I need to say this. When we look at these signals and we look at the action, the price action, nothing is cast in stone. They're only to give us a hint as to where we think price may be headed. In this particular case, you'll see price took off. You'll see the price based here on the 200 period moving average. It struggled. And right here, it put in a hammer. That is a support sign. And if you look back over here, you'll see put in 2 hammers here. This red one and this green one, they're hammers. And these two together, the red with the green, is we call that a harami. So these are candlestick patterns at a 200 period moving average at a strong support that gave us an idea that price might be moving up here. Okay? And that is what's called convergence. When several different things, your moving averages, your candlesticks, and anything else, your volume, they're giving you a hint that price might be moving up. Okay? Okay, I picked this one out to give you some examples of what we call Fibonacci retracements, okay? Now what I'm going to do, I am going to show you what I did here again, because I want you to be able to do it yourself, and I want you to see where the information is coming from. So the ones that I've done, I'm going to delete. But the thing that I'm not going to delete is the percentage that I put behind them, right? Okay, now if you look, these are retracements. These are what we call retracements. Come here, here, here. Actually, this one will go down here, and this one. What we do, if you hold your cursor on telechart, I don't know if you could do this in any other charting program, but if you hold your cursor down on telechart, the little box will come up at the bottom, and what you're going to do, you're going to hold this thing down until you know you're at the bottom. See the little yellow line that it makes? When you hold this down here, keep your hand down. If you look right here, you'll see it says 12.55%. That's a Fibonacci retracement of 12.55. Okay, it might be 15 because I have 15 up there. Then this is another Fibonacci retracement. This one is 7%. This is another one. See the high here and the low here? This is another one. This is 9.2%. This is another one. This is 8.7. Excuse me. This is another one. Hold it down and you'll see it on your little chart to the left. At the bottom, it says 13. Now, what I do when I'm trying to figure out if I'm going to trade a company on a short term, a lot of times I look at the Fibonacci retracements and try to calculate an average. So when it starts doing the retracement again, if all things are the same, I might consider trading that on a short term if it's in an uptrend, okay? Now, we can see that this particular company did several Fibonacci retracements right here while it was courting the 200 period moving average. Remember? I told you the 200 period moving average is, in traders' term, we call that God because it's very powerful. So, what happened? Watch this, what it did. This particular company went further, and it really went under the 200 period moving average. And now it's struggling to come out from the what we call the gravitational force of the 200 period moving average. So you can see, although I had calculated the Fibonacci retracements, when I see this strong negative action, it wouldn't behoove me to take it, especially if that price stays under the 200 period moving average. Oh, this is a weekly chart, and I wanted you to see these stair-step this stair-step pattern. Look at it here. See that? Look at this one. See that? And look at this one. See that? Now, the one thing you want to make sure of in stair-step patterns, you want to make sure that the lows are higher and higher. You want to make sure the lows are higher and higher. And you want to make sure the highs are higher and higher. Okay? Always pay close attention to higher highs and higher lows and lower highs and lower lows. We have a haiku. A haiku, H-A-I-K-U, is a Japanese poem that tells a story. Higher highs and higher lows, where's price going to go? Lower highs and lower lows, where's price going to go? So we do that to remind ourselves to always pay attention to higher highs and higher lows. And the final chart that we will review today is ITRN. We're going to tell the story of ITRN, okay? I drew it so we could tell a story. You could see back here on about 10, 5, 10, 19, okay? Right here, number 1. the arrow pointing to number 1, you can see that this company made a double top, that right there. And if I were to zoom that out, you would see that it also made 2 evening stars. We call them evening stars. They are a candlestick reversal pattern. Okay. Now, about the same time, look at 2. This particular company went below the moving averages. If I could fan it out a little bit, which this is a daily. Maybe I can go to a weekly and get a better view. Yeah, this weekly now, so you can actually see the 2 shooting evening stars right here. This candle, the small red one, and the long red one. The green candle, the small red one, and the long red one. You can see the evening stars. So at about the same time, where number 2 is, you can see the moving averages crossing over to the downside. Now, mind you, this company was still above the 200 period moving average, okay? But look what happened. As the moving averages crossed to the downside, somewhere down the road at number 3, and we can see back here, the 8 period was the first one to cross. They started crossing down below the 200 period moving average. Now, what does that tell me? Why would I want to trade a company like that or even invest in it? Now, if I were going to invest in it, I would make sure that my analytical and my fundamental due diligence is stellar. It's good. It's a good company, okay? They're not a company that's in threat of bankruptcy. It's a good company, okay? And they're in a good sector and a good industry, okay? And then I would wait for it to approach a strong low, maybe like a 52-week low or a 104-week low, which is a 2-year low. Then I would start waiting for some good news to come out or read the company's 10Q, okay? And then when I'm comfortable that it has based out and that it's not really going to go too much lower, or it may, but it's not too far from where I have it, that at that time I might take a position in the company, okay? But I'm just doing this to tell you a story. You can see here where you can see here, I'm sorry, but you can see here where the stock went down below the 200 period moving average. And as it went down, look what it did. That right there is what scares the heck out of investors. And that's why they do it. Okay. Now, one thing I will say, this one had already had a capitulation. Here's what a capitulation is. I want to show you. It had given us a warning back here. See the circle I'm drawing around? You see the circle I'm drawing around price? See all this heavier than 50 period moving average volume? And if you see, it's doing another one right around here. See that? They usually come in 2 or 3s. And you see what it did? We call these capitulations. And it's good to look for them if you think you're in trouble of a company that might be sinking on you, okay? And as you notice, what happened? Right here at number 4, the moving averages crossed above each other. That's not my signal that this is a candidate, but number 5 is my signal. All the moving averages started crossing above the 200 period moving average. Now, we don't know where this is headed. I don't invest in this company. I don't even know what this company is. Okay, I know they're in the communication equipment sector and industry, but I don't know anything about them. But that's how what we call divine a chart. That's how we look at a chart to determine if it's given us the right signals that this is something I should consider investing in. Okay? Now, as I will say, that's the end of what we're going to talk about today. I want to reiterate that I do not invest in any of these companies. I don't even know what they do. I just picked them because I saw something that would help me display a part of the lesson for you. Okay? Now, let me say this before we quit. In the morning when I wake up, the first thing I do in my morning routine is I look at the pre-market for the companies that I hold. And I look at the news for the companies that I hold. So I'll open up Fidelity and I'll read the news, if there's any new news, on the companies that I'm holding. and I see what it's trading for in the pre-market. That kind of gives me a hint what the action for today is going to be about. I don't really need to do the pre-market thing, but when you're addicted to the market, that's what you do. All right. In the evening time, I look at time and sales in Fidelity to see if it's trading higher on the post-market than it did during the day. That's a good sign for the next day. I also, again, I check the news. I check the news. I check the news in Fidelity. And sometime I will go to a company's website. For example, if you go to a company's, let me show you how you do that now. And that'll give you a good idea on how you do that, okay? We're going to go to, and I'll do these little things as I think about them, okay? We're going to go to this company here. Trying to find a nice company for you that has a website that I'm kind of familiar. Let's go to Bed Bath & Beyond. All right. Now, if I go to Yahoo on Bed Bath & Beyond, I can go down here to Bed Bath & Beyond, and guess what? There's their website. I click on that website. It brings up Bed Bath & Beyond's website. Now, if it doesn't say investors at the top, guess what? I can go down to the bottom, and somewhere down here, look what it says right here, SEC filings. So this was the investor site. I can go down here, and I can look at what they're talking about. Now, this right here would be news. See where it says events? More financial news, right? This is where what happened when I clicked on the website in Yahoo, it went straight to the financial section of Bed Bath & Beyond. Generally, that's not what you're going to get, okay? So, if not Bed Bath & Beyond, Best Buy. So, let me show you. If I go to bestbuy.com, okay? bestbuy.com. Generally, this is what you're going to get. They're trying to sell you something, right? Now, if you don't see something up here that says investors, go all the way down to the bottom. I'm showing you here. And you will see over here, support services, partnerships, about us, payment center rewards. One of these over here is going to say investors. Affiliate Best Buy, health, education, support services. One of these will say investors. Or it might say this right here, about us, corporate information. That's probably where you're going to find it, right there. So we're going to click corporate information, and then you see up here at the top, it says investors. Go to investors, and you come right back to the place where we were. Here you can get the financial news about them and any other information that you want to get. Their SEC reports, okay? So you don't have to search over the whole world to find out information about a stock. The best information is going to come from the company's website or SEC report or a market maker. Not Yahoo, not any of these outside companies, a market maker, and that's who you have your account with, because they have a fiduciary responsibility to have good information available for their clients. Yahoo doesn't have that. Google doesn't have that. And any other website you're looking at may not have that. But the company and your market maker does. Okay, we're going to wrap it up for today. Thank you so much. And I really do hope this helps you in your journey and your process. Bye-bye.